if there was one word to take away from 25, it would be tariffs, industrial policy, competition, really pushing governments to become a little bit more self-reliant, really pushing governments to think more so about developing new trading relationships also, right? So there's been a lot that's happening and creating essentially a more multipolar world, right? And so with that, I mean, what investment themes do we think stand out the most? And Christine, we'll continue with you on that one.
Maybe we'll start by taking a step back and talk about how we're thinking about the multipolar world. It's not a new concept, and for decades, really, we're used to thinking of a world more U.S., China, sort of being number one, number two in terms of economic size. And then if you're a middle country, you kind of have to pick who your strongest ally is, and sometimes that differs between geopolitical or defense alliance versus economic. So some of the countries in the Asia Pacific would be a perfect example where geopolitically, they might be aligned with the U.S. Economically, they do need a relationship with China. But to your point, I think one thing that's really emerged and really accelerated last year is this emergence of multipolarity. And what we tried to show in this graphic, really, it's our kudos to our design team. It wasn't Chad and I are not creative at all. It's just the concept that now the middle countries, Canada being one of them, we're trying to pull our own little spot as well. Now, we're still going to be trading with the two bigs in different ways. Canada being proximity to the U.S., we're always going to be very close to them. But certainly thinking more in terms of self-reliance and self-sufficiency. And to your point, tariffs was a key factor that really amped that up last year, right? So the World Economic Forum does a global risk survey where they interview global leaders, economists, experts in different industries. And the 2025 one, they interviewed 900 individuals across all these different segments. And the key risk, but I would also position as an opportunity, like on the slide, is multipolarity. And so they highlighted what that meant was you're going to get definitely more fragmentation. It has implications for the supply chain. You will get more policy shifts, more rapid policy shifts. And I think what they mean by that is in a world where it was China, US sort of leading their respective regions with some crossovers, you tend to have more consistent policy. So using Canada as an example, we had a certain consistent policy direction given our relationship with the US. But now we're trying to think more about what are the key sectors for us. So you look on the right side here. Here are some of the considerations in terms of themes, right? So everyone's thinking about domestic manufacturing. And part of that is job creation. Part of that as well came out of the lessons we learned during COVID, where we recognized, oh my goodness, our supply chain was so fragmented and so global that if even one piece wasn't working, like all those cars that were parked in the US, they were basically built, but they were missing chips. That's a big part of it. And then, of course, national security. So what industries do we deem to be important? Steel, agriculture. In the US's case, they think autos. We can never replicate our own chip or AI industry, but technology is one that countries are thinking more, we'll call it more intentionally about, especially when you're thinking about AI, data sharing. You know, I think we're going to come out with our own AI policy in Canada soon. How do you protect data? If another country's company is the main provider, how do you sort of gate Canadian data to make sure it's not being utilized in ways that is beyond your control and perhaps in ways that could harm our people, things like that. Infrastructure development, that's a huge focus, and it's a combination of infrastructure in a lot of developed countries are quite aged. We know that. So it's that replacement cycle. It's also a refocus of governments on increasing their fiscal spend. So whether it's Europe or Canada, the difference between 2 years ago and today, the level of infrastructure focus is certainly much higher. Energy security, huge one. This is something that fortunately in Canada we never think about because we're so blessed. We have more energy than we need in all forms. But for countries like China, perfect example, they don't have a lot of hydrocarbons other than coal. And for a lot of different reasons, they're moving away from coal. They don't want to be reliant on anyone else. And clearly, we can touch on Venezuela shortly and how that kind of role in terms of energy security as well within a hemisphere. So depending on the country, they're responding to energy security differently. So China, being the most starved of hydrocarbons, they realize, well, we can't manufacture hydrocarbons. So 10 years ago, about 75% of their energy generation came from coal, which they do have a lot of. Today, it's about 50 to 55%. And that 20% decline has been replaced by solar and wind, because those are two things that they have a lot of if they can figure out how to harness that. So energy security in different ways, let's talk about Venezuela now from just an investment perspective. The administration in the U.S. has talked about the importance of for one thing, bringing supply back on the market, because Venezuela used to produce 3.5 million barrels. They're now just over 1 million. It will take time because a lot of the infrastructure has atrophied. But it is in the Western Hemisphere, as the administration in the U.S. puts it, and they do want to have some level of at least influence. And there are implications for the Canadian oil and gas industry as well, if we're interested in discussing that. And reshoring initiatives, that kind of ties in very closely with sort of domestic manufacturing and self-reliance. And then the last one is defense and national security. So part of a multipolar world where, as a middle country for Canada, we're having to think about our relationships with different allies. Part of what we are thinking about, and it's not just Canada, it's also Europe, it's also a lot of ASEAN countries, is spending more on our own defense. So we're not talking about another Cold War, another big push to rearm. But if you look at NATO and the increased commitment in terms of defense spending, that's the perfect example. So Canada has already, Prime Minister Carney and his administration has already outlined what they intend to increase spending on. So all of this are fully aligned with sort of that multipolarity and starting to think more about, we're always going to have allies, we're always going to have trading partners, but where do we want to have a bit more self-reliance? And this is backward looking, so this is not meant to be a recommendation, but again, it really shows up in sector performance. So I'm going to go back to K-shape, kind of lean a bit on that. It's high level index performance actually can be quite misleading, because when you look under the sector level performance, these are just a few sectors that in a way reflect a lot of that multipolarity. So Canada Metals and Mining, what was the single best subsegment? Gold. And what was the main driver? One of the key drivers was just central banks looking to diversify their foreign exchange reserves away from fiat currency or US dollar into something more tangible. EU defense, just basically reflecting the fact that the European Union is now committed to increasing their defense spending, and a lot of that will go to European companies. China robotics, we don't need to go into a lot of detail. That's kind of the whole emergence of AI spending and advance of robotics. And USAI, we spent 10 minutes talking about that. And all of that, if you look the outperformance relative to world equities, it shows why in a multipolar world where there is going to be a lot of divergence in policy and focus, that understanding of these themes is going to be key. You don't want to overexpose yourself and make big tilts, but again, it's just a key driver.
Yeah, I think one of the most interesting aspects as well is the US AI theme gets all of the attention.
Yes,
right?
exactly.
And 46+% return of the basket we're showing here last year, exceptional year, no question. But this kind of, let's call it a little bit of a disintegration of that unipolar US, everyone works together on the same sort of, the same mindset and this global order, and that dissolving more into countries that worried a little bit about themselves, as well as some multipolar kind of characteristics around different regions. That policy shift has really actually unlocked opportunities globally, right? For and sure, you could pick these themes. If you're really lucky, you could get them right. But the first way to get exposure is to be globally diversified. And it's really kind of interesting that, and this is actually one of our themes last year was that, after the U.S. election, there was a kind of this assumption that America first sort of policy shift was just going to be great for U.S. assets, and the rest of the world was going to fall behind. But if anything, the response to that shift has been unlocking investment opportunities in other parts of the world. I mean, the defense story is a very clear one, right? Many countries have taken on for themselves, and in Europe, I think probably to the greatest degree, are going to unlock some fiscal space to spend on their own, on their own defense, thinking that, okay, we're not going to rely as much on the U.S. going forward. In Canada, certainly we're in there as well. I think infrastructure is another example that gets added on there. You've explained, I guess, how the role of the U.S. dollar and the benefit to gold, but to base metals as well, which is, we reflect here in the Canada story that was all about metals and mining. Base metals, again, tied into that infrastructure story, tied into the AI and electrification theme. It's been probably the most interesting thing for me in the past year. Has just been that fact that you've seen global diversification begin to pay off once again, and just this broad disruption, right? Like when you don't know what's coming from a policy perspective, just the shift unlocks new opportunities, right? And you see it, sometimes you see it over very short periods. The first day the market opened after the action against Venezuela, obviously you saw U.S. oil services companies, huge outperformance. Canadian energy sector, probably, I think, overdone concern around the fact that you would have a similar grade of oil coming onto the market, but probably over a period of 5 to 10 years to really get up to scale. But again, that gives time for Canadian policymakers to react as well. Maybe we need some of our own upgrading capacity. Maybe we really need to push even further on getting our oil to market in more parts of the world, right? So the response has been, I think, interesting from national governments, and investors have been, very, very quick, I think, to jump on unlocking some of the value in areas of the market that I think were ignored for a long period of time.
You talked a little bit about getting energy to the rest of the world, and there is a question here that I want to just quickly touch on with you. And you've already talked about a bit about the Canadian oil and gas sector. Please feel free to elaborate if you want. But there's been no news of new pipeline development. Any thoughts around that? Like, is that something that you would monitor and think about?
Oh, definitely. I think it's on our radar. I mean, it's one of the positives, I guess, at least mostly in words and policy over the last year, right, in terms of our change of government here in Canada. And if we don't have it as a theme, but I think this year investors can be watching to see actual action, right? In terms of more details, shovels hitting the ground on infrastructure, including on the pipeline front, which I think we just think makes a lot of sense given the sort of backdrop. And I think it ties really into this theme around polarity, like for Canada's role within that, is probably to be doing business with more of these different spheres of influence than kind of siding with any one of them, right? And I think our place as an energy and broader resource provider is kind of central to that, right? So I think commenting on policy, we'd be looking for more detail, more action there. And I think it's actually quite important, I think, from a perspective of even Canadian assets and Canadian investments that you hold. If policymakers here are kind of doing the right thing, doing their part on public investment, I think you'll see private investment, global private investment. Those dollars will flow to Canada. Again, there's clearly capital that's looking for opportunities, right? So again, with the right policies in place, I think it could be quite beneficial to Canadian assets.
And just to add a bit more, because seeing that question from specifically on Canadian oil and gas sector, given what happened in Venezuela, maybe a few sort of numbers around what the trade is. So we export about 4.2 million barrels a day. All but 100,000 barrels goes to the U.S. And of that, in 2024, 80% was heavy. And that's what Venezuela has. So it's really thinking about the displacement. And first of all, change takes time. So again, we talked about how production in Venezuela, first of all, is, as Prime Minister Carney said when he was asked about this in Paris, it's a good thing for Venezuela. It's actually, if production can be brought back online for the country, for the people of Venezuela, and in a way, it's good for the Americas too. So taking a bigger picture view, it is good. Could it displace some barrels from Canada? Yes, but let's think about where the refinery sits. So most of our heavy goes through pipelines to the Midwest, where the refinery sits. So that's unlikely to be displaced because the Venezuelan barrels will come via ships to the Gulf of Mexico refinery. So we do send some barrels down there, so those will be replaced potentially. And then we do send some to the East Coast as well. What can we do in the near term? So the Trans Mountain expansion is up and running starting 2024. So there's room there to increase the amount of heavy that we can ship out to Asia. And obviously, as Chhad said, the new pipeline. Now, managing expectations, new pipelines are very complex because there's environmental considerations and all of that permitting. And then there's the actual building of the pipeline. This isn't just kind of putting a house up on a piece of land, right? So that's going to take several years. But there are a few things that we can do in the short term. One thing could be looking at, do we increase our refinery capacity domestically? So again, you and I spoke about this earlier today, like the thought of adding more value to our own natural resources instead of exporting them in raw form. So it, and you sort of hinted at this, it's like the initial response is, this is very bad. Canadian oil stocks sold off, especially those with some heavy exposure. And then once the market's got a chance to think, okay, what's the actual impact on earnings for the next 3, 6, 12 months? Oh, okay. So I think it's really important to keep that in mind. But in our view, it just adds to the impetus, the importance of us diversifying our trade, our trading partners, especially for oil, which is one of our big exports.
Mm-hmm.